Today, we are looking at inducements. This is a very important topic that will help you take a well-refined entries from the extreme points and avoid the traps market places on the chat. We're going to go to the screen now, and I will show you how to point them out and also how to avoid them. Let's head to the chat. All right, traders, we're going to start today by pointing out the meaning of inducements first. I've been able to draft out a quick explanation on what inducements means, and this is what we have here. Inducements levels are areas in the market where liquidity is engineered to lure traders into making wrong decisions, often leading to stop hunts before the real move happens. Understanding and avoiding them is crucial in smart money concept trading. So, like I said, this is a simple topic, but very important, because most traders, you can see what we have here. It lures traders into making the wrong decision, often leading to stop hunts before the real move happens. So if you don't understand and also learn how to avoid this, most of the times you may see yourself taking entries from inducement levels, and then market will clear you before moving to your direction. That is where you will see price stopping you out and then moving to your direction, and you may be wondering what the hell is going on exactly. And I know you must have seen something like this. Let me quickly give an illustration before we go to the chat. Let's say you pointed out a break of structure like this, and you're waiting for price following our strategy. You're waiting for price to come back into this particular zone. And then when price was about to come back into the zone, we got another break of structure to the upside. Most of the times, this level is what shows up as the inducement. And some traders may think, okay, this is a new structure. Let them start buying from here. And at the end of the day, price may tap in. Behave as if it's about to move to your direction and then clear you out to go to the right point and then move to the intended direction. So in today's video, you're going to learn how to actually avoid this and also trade from the right point. Sometimes price can still come to inducement and then push and keep going. But what you need to ask yourself is, if I keep taking trades from inducements all the time, how will my trading results be? So we're going to go to the chat now, and I'll show you guys how to point that out. So I was able to backtest gold from January. So let's go to the extreme level. So from here, I was able to point out where inducements showed up on the charts, how it tricked traders, and what actually happened. So I'm going to show you guys how I pointed them out and also how you can identify it. Now, this is the first one on the list. So from here, we got a break of structure. Following our strategy, this is the origin we'll be waiting for price to tap into before, moving to our direction. And you can see price came back into that origin and then printed out a massive push to the upside. But then what happened before that? We got this break of structure. Now, from this point, this was where price was trying to retrace back into this origin. And from there, it created a new break of structure to the upside. Now, this new break of structure has created an inducement. And most traders will map this out thinking it's the white demand zone, that this one is no longer valid. And you can see price tap in there, print out, little movement to the upside, giving everyone hope that the movement is about to take off from here. And then, price retraced, cleared everyone out. This forming an inducement liquidity. Cleared everyone out and then tapped into the white origin before dishing out the massive push to the upside. Now, when you see this, how will you know the one that is an inducement and the one that is not an inducement? That is when you pick up your fib tool. And now, when picking up your fib tool, look at the point where price took off from and where it retraced from. So now this is a buying scenario here. We're going to start from this swing low to the swing high. Now, any origin that is around 0.5 or 0.618 is an inducement level. You need to pay attention to the level or the origin that is around 0.79, which is this one. That is the premium or the discount level. Now that we are buying, that is the discount level, and that is where you wait for price to tap into before going to your direction. It requires patience. Most traders, they don't want to wait. And a lot of them will get lured into this particular zone, and then price will clear everyone. Now, inducement shows up because price wants to generate liquidity before bringing out the intended movement. So stay away from inducements levels or you will fall into all the traps markets will create. So going further, this was a work of structure. We can see levels price did not come back into this particular origin. So if I'm to take trades from this particular level now, this is the point I'll be looking to take trades from. I can also see that an inducement level has been created here, so I'm not going to pay attention to this. I want you to point this out as my liquidity level, and I'll be waiting for price to come here. But you can see price didn't come back to this particular level. So let's keep moving forward. Now, this is another example. We got this break of structure, and after getting this impulsive movement, a clean break of structure. And then before price came back into the origin, look at what was happening above here. We also got another break of structure to the upside. That is the BOS.
Now, a lot of traders would also want to take a buy from here. So you can see price tapped in and print out tiny movement, but it did retrace all the way down to the main origin before dishing out the correct movement. So moving forward, I still map this out. This is another example. A break of structure here, this is a tiny one, and then we also have another break of structure at this level. So this particular point will trick a lot of traders into taking a buy here, thinking that this level is no longer valid and price may not come back to that level. And you can see what happened. Price started, the funny thing is that price will always tap in and then behave as if it's about to push to your direction, and then it will clear you out. Because a lot of traders will place their buy here, stop loss a little bit below, which simply means a lot of liquidity will be sitting here. And you can see how it cleared everyone out before printing out the main movement. So remember, all you just need to do is peek your fib tool, place it from the swing low to the swing high. If it's a sell, you put it from the swing high to the swing low, and then pay attention to the origin that is around 0.79. Let me quickly show you guys my fib settings so that you can also use that to set yours. So this is my fib settings. You can see everything I turned on, which is this one. So quickly take a screenshot and then set yours. So let's keep moving forward. We also have another inducement level here. Still same example. So this being the origin that caused this particular break of structure, we got a break of structure here to the upside. This particular level tricked a lot of traders into placing a buy, and then price ended up coming back into the right origin and printing out the right movement. Now, another thing we need to point out is you can see the type of movement price prints out whenever it taps into the right origin, and type of movement it brings out when price is reacting from an inducement level. So the right origin will always push out the massive movement to the direction we are looking at. And then the inducement level will just print out the little movement just to trick traders into thinking that that level will hold, and then it will clear you out. This is also another example here, a break of structure and then FVG. Here, price tapped into an FVG and also pushed to the direction, but that's not what we are looking at. You should pay attention to the inducement level price also created here. Now, you can see the massive breakout structure here. A lot of traders will be placing their buys here, waiting for price to come and put to the upside from this point. And you can see how everyone, got cleared out, and price returned back into the extreme level and still pushed to the direction. So you can also see what we have here. Same thing. Break of structure, you map out the origin, then price created an inducement level here. Also having in mind that all these inducement levels are also a form of liquidity, because once they are present, they are liquidities that you should wait for price to sweep before tapping to your origin. So I have a lot of them here. So you can also see a break of structure, price tapped into the right origin, clearing out the inducement. You can see the inducement level here, break of structure, price tapped into the inducement level. This printed out a little movement and cleared another one. Break of structure, inducement level created, price tapped in, a little movement, cleared it to the downside, and then pushed to the direction after tapping into the right origin. Same thing here. So that is how simple we keep it. Avoid the rush. Avoid the rush. Once you point out liquidity or inducement levels, wait for price to get to the right origin. Don't try to rush them to catch the movement. Don't rush to lose money. Use your fib tool when there are a lot of origin, and then use the origin that is very close to 0.79. That is how you can keep it simple. Wait for price to sweep liquidity before tapping into your origin. All right, guys, thanks for watching, and make sure you practice and understand the strategy well before you start trading your live accounts. Proper risk management is always advised. So, see you in the next one.